This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Wednesday, July 24th. Oh, wow. If you don't hide under a rock, you know that today was a very big sell-off. So let's jump right into the numbers. There's a lot to cover today. I'll try to go fast without rushing. But taking a quick look at breadth, we had 301 new highs versus 194 new lows on the NYSE. And I'll cover this in a bit. We had 18% of stocks advancing versus 79% declining. Looking at the 50-day, 44% of stocks were below their 50-day, and 33% of stocks were below their 200-day moving average. All the indices were down. All the indices closed near the lows. The Dow was down 500 points or 1.25%. The NASDAQ was down 654 points or 3.6%. The S&P 500 was down 128 points or 2.3%. Taking a quick look at mega cap and mag 7 names, it was bloody. Now, this all kind of started with Google's earnings and Tesla's earnings yesterday after the market closed Tuesday, and it just kind of extended into today. So Microsoft down 3.5%, Apple down 2.8%, Alphabet down 5.03%, Meta down 5.6%, Amazon down basically 3%, Tesla, ready for this? Down 12.3%, and Nvidia down 6.8%. All of the semiconductors were red. That should give you a pretty good complexion. Like JP Morgan was red, Berkshire Hathaway red, Wells Fargo red, Bank of America red. Let's take a quick look at the sectors today. Leading to the upside, there was a green sector. Usually on days like this, there are none, but utilities were up 0.72%, or basically 0.74%. Healthcare was up 0.4%. Consumer defensive was pretty much a nothing burger, but leading to the downside today, technology down 4.1%. Communication services, which houses names like Alphabet, like Meta, down 3.8%. Consumer cyclical down 3.4%. Industrials down 2.2%. Real estate down 1.5%. Basic materials down 1.4%. Real bad bloodbath today. So let's keep going here. A lot of things stuck out, but I did want to give a quick shout out and thank you to a premium subscriber, Will, who already is on the testimonials page, but during the premium chat discourse earlier today, he sent me a nice note that he was not an active trader. I'm just going to read you the quote. Quote from Will: "Not an active trader, but I was able to hedge with SOXS and SQQQ in my IRA last week. Thank you for giving me insight to protect my assets. Your Substack has paid for itself many times over." I want to really thank you, Will, for saying this. Obviously, I do not take full credit because Will, he's obviously making his own decisions, right? Like, he's listening to the podcast as well as reading my content, but he's also on many other financial Substacks and financial websites, and he's internalizing all of this information and making his own decisions. And I always talk about, and he sent me another private message that I won't share the whole details about, but the theme is that he has a much better handle on his financial future, his trading account, his retirement accounts, and he's taking much more ownership of the outcome. And that's all my goal is. That's my entire goal. If you know my byline, it's financial freedom is not free, but the pursuit and the treasure is worth that pursuit. I myself am in a position where I don't have to W-2 anymore, and I'm only doing this, the trading. That's 99.99% of all of my income/wealth. And I want to pay it forward. I want to leave something behind for the next generation. And this is the way I do this on the side as a side hustle. I have to do this work anyway. Everything that I'm sharing as far as my knowledge, I'm doing that anyway for myself every day. I'm simply sharing my notes with the world, some of it with the free and most of it with the paid. So thank you so much, Will, as well as all my subscribers, both free and paying. This was the goal, is to build this community, to continue to grow a subscriber base that wants to have their ownership in what happens to their wealth that you work so hard for. And you can have a financial advisor, right? That's fine. Many financial advisors are great. Most are not. But even if you have a great financial advisor or CFP, you have to know enough to grade their homework, right? Versus just like, do I buy? Do I sell? What do you want me to do? Should I buy? Should I book my gains? Like, it's fine to get input, but you have to also teach yourself to fish, because God forbid, let's say you have a great advisor, or let's say you're self-directed and you listen to a few Substacks or financial blogs, and let's say they all pass away. Then what? Where do you get the guidance? So let's continue on. And, if you want to go to the paid side of the content, the discount that I had for July 4th is over. But if you really want to upgrade, but money's tight and you want a discount, message me through the private message on Substack, or just email me. It's nyugrad@protonmail.com, and I'll email you a discount code, because I really want you all to learn and help teach you to fish. So that's the end goal. So let's keep going. That's the last of the radio advertisement for myself. Let's jump into a free lesson here. So I have the podcast on, as well as written form, why breadth is so important and how to use Vol-D, which is the NYSE up-down volume. You can also track the NASDAQ composite up-down volume. And this is specifically that. So at 2 p.m., the QQQ, which is the NASDAQ composite, was bouncing very little. It went from like 466 to like 467 and a half, but it's a bounce. And, folks that want to buy the dip, they're looking at that like, oh, right, the selling's over. I'm going to buy. I'm going to go long. This is oversold. I'm going long. So while that was going on at like 1 o'clock, I was completely focused on the ticker symbol on my trading platform is $VOLDQD. That is the NASDAQ up volume, down volume. So while that little pump rally or bounce rally was happening on Qs, if you take a look at the NASDAQ volume up down, the volume up was feeble, minuscule, a mosquito. And that told me, hey, I have some short positions. I'm going to book some of those gains, but maybe I'm not going to just close it and reverse and go long here. Maybe this could be a fake out. Let's wait and see. And lo and behold, that rally lasted 15 minutes. And then we started to sell off again. So intraday breadth using Vol-D, or the NASDAQ Vol-D, which is VOLQD, is a lie detector test. It's the true intention of the stock market. As I say, you and I have the disadvantage of a small account. But that is also an advantage. It's kind of like the Sun Tzu Art of War. Like, you and I are not, J.P. Morgan, equity traders. We don't have the size, we don't have the capital and the backing and to see order flows like a lot of the brokers do. That's their advantage. But their disadvantage is also their size. So I am trying to use our smaller size to my advantage. If I look at breadth every day, almost every second, it's very hard for the sell side of Wall Street to lie continuously every day, every second, every week, every month on their true intentions. That's why I follow this. And it told me in the afternoon, this is not a real rally. All right, let's fast forward to 3:58 p.m. I started obviously, watching this all day, but around 3:45 I started to really close look at this, because at 3:45ish, 3:30 to 3:45, the stock market was rallying again or trying to bounce. And look at that. Vol D of NASDAQ never bounced. Never. So I knew right then that little rally toward the end of the day around 3:30 was also BS. It's a lie detector test. It doesn't work 100% of the time. But if you follow this every day, you're going to start to feel a pulse of the tape of the market. And that's why I preach this all the time. So that's a free lesson for today for free members. What stuck out to me was it was all day selling, as I just said. The 10-year yield is rising. Aftermarket, Ford shares are plummeting 12% after a massive earnings miss. Chipotle Mexican Grill, CMG, is actually up after earnings. It was up like 10%, but it's already losing steam. I'll post the real-time chart of that in the show notes, but keep in mind, after hours, after earnings, things get really volatile. And again, if you take a look at Chipotle Mexican Grill, after the stock split of 50-for-1, it's done nothing but go down. So as I said, these things happen at the late stage of bull markets, not the beginning of bull markets. So what was strong? This list is going to be mostly volatility or short ETFs, so bear with me. The VIX was up 22% today. The semiconductor short ETF SOX-S was up 16.1%. SPXU, which is short the S&P, was up 6.7. TZA, which is short Russell 2000, is up 6.2. Short housing DRV is up 4.2. Short financials FAZ is up 3.7. Short housing SRS is up 2.5. So yeah, that was all that was up. Are you ready for the down? This is a long list, and I'm not going to cover everything. So what was weak? These are all percentages, okay? FNGU, that's Pro Shares or Bank of Montreal, bullish FANG ETF, down 16.5%. The semiconductor long SOX-L down 15.1%. Tesla down 12.3%. Roku down 10.4%. Affirm Holdings down 9.8%. HUT 9.4%. SMCI 9.1%. Wayfair 8.7%. Zeta 8.3%. ARM 8.1%. ACMR Research 8%. TerraWolf 7.7%. Dell 7.7%. Palantir 7.6%. Broadcom 7.5%. Zillow 7.3%. Red Rock Resort 7.2%. Reddit 7.21%. Rivian 7.03%. DJT 6.9%. Nvidia 6.8%. AI 6.7%. ASML Holdings 6.4%. ARC Innovation Fund 6.3%. Qualcomm 6.3%. IREN 6.2%. AppLovin 6.1%. AMD 6.08%. Synopsys 5.9%. Kava 5.6%. Meta 5.6%. SMH 5.45%. Socks 5.41, Shopify 5.41, Lamb Research 5.19, DraftKings 5.08, Alphabet 5.04, New York Community Bank 5.03, Coinbase 4.8, Zscaler 4.8, Datadog 4.7, MongoDB 4.6, Marathon 4.5, Carvana 4.4, Beazer Homes 4.3, Sweetgreen 4, CrowdStrike 3.99, Intel 3.7, Instacart 3.7, Toll Brothers 3.6, NDX, which is NASDAQ 100, 3.65, Microsoft 3.59, Hovanian Homes 3.4, IGV Software 3.3, NQ Futures 3.3, Bitfarms 3.3, Kura Sushi 3.2, DoorDash 3.1, DHI Home Builder, DR Horton 3.1, Uranium URNM 3.07, MGM Resorts 3.06. I am not doing the 2% negative. I'll be here for an hour. So why did I just go through all that? I could just simply say, look at the show notes. That's how bad it was. That's how broad of a sell-off it was, triggered by two of the Mag 7, Tesla and Alphabet. This is why I always say that the markets are too concentrated in the Mag 7 and the semiconductors, because once they begin to sell off, there's nowhere to hide. DraftKings and Roku are not going to hold up the market if Tesla, Nvidia, Google, Microsoft, Apple, Amazon all sell off. They don't have enough market cap to hold everything. This is why I also said the Russell 2000, everyone's saying, oh, it's just rotation. It's just rotation out of Mag 7 into the Russell small caps. It's all going to be great because the interest rate cuts are going to be great because small caps are US based and they need to refinance their debt. Well, I'm telling you, if the Mag 7 and the semiconductors continue to sell off, the Russell 2000 cannot hold up the world equity markets. They cannot. I do not care if interest rates go to 3%. The Russell 2000 cannot hold up the entire stock market. Free members, there's thousands of earnings reports coming out, okay? I think after the market closed, KLA Corp reported good numbers, but again, they're up, but they're not going to save the market. I think IBM reported, Ford, as I noted, reported, and they missed big. Tomorrow morning before the market opens, you have AbbVie, you have Unilever, Honeywell. Those are pretty big names. So just keep watching a lot of these earnings reports and the reaction. Thursday at 8:30, you have the GDP numbers coming out, as well as initial jobless claims and durable good orders. On Friday, you have PCE index, which is what Jerome Powell and the Fed say they follow closely. So that's coming out Friday. And you and I all know we go grocery shopping and we pay rent or mortgage, insurance, etc. Inflation is raging. Whenever you hear the Fed or the government or the news saying inflation is under control, the rate of inflation is going down, they're talking about for the super wealthy. Okay? They're not talking about for the 99% of the planet. I don't see the inflation. When Janet Yellen says, I don't see it. I don't see the inflation. I went grocery shopping. She's rich. Powell is rich. So just understand, inflation is raging. Whether they cut rates by 0.25% basis, it doesn't matter. The Fed funds rate should be over 12-15% right now to fight this inflation, but they can't because of all the debt that's out there. And we could never service the government debt at 15% interest rates. Everything would crash. And that is why they keep lying to us. It's like, it's just like, bad parents say, oh, we're not getting divorced, son or daughter. Everything's good. Your mommy and daddy love each other. And then a year later, they get divorced and you're, figuring out who you're going to live with. So this is all BS, and everything is a distraction. Just watch prices, watch the reaction to prices. That's all I have for today for the free members. Premium members, please stay on. We have probably about 30 charts to go through. If you're a free member and you would love a discount to subscribe to the paid side, but you want a discount, just email me or message me and I will hook you up. All right, I'll talk to you guys after the Thursday session. That's my train.
Stand clear of the closing doors, please.